biggest message here, the simplest and strongest message, and it's one that we've been talking about for a very long time, is diversification geographically. For nearly 15 years, the US consistently outperformed every other market for good reason, led by tech, rising dollar. We're beginning to see at the margin a bit of a shift towards cheaper areas like Europe, where the fundamentals are improving moderately, and indeed where the currencies are beginning to rise.
What about the UK? I mean, you look at the performance of the FTSE versus the DAX this year. FTSE 100 up about 4%, the DAX up about 15%. We just heard from Next. I mean, it's just one anecdotal example, but results pretty good. And the UK consumer continues to spend, and the Bank of England has some room to breathe and cut rates further. So what do you think of the UK market?
I think it's good. Of course, the UK market, you can look at it in different ways. The FTSE 100, which is very global and doesn't have any tech in it, and that's one of the differences reflected in its performance compared to other areas. But also the FTSE 250, which is more domestic, and I think domestic real incomes are picking up. The market is cheap. In fact, the FTSE 100 has a free cash flow yield of nearly 6.5%, the highest of any major market in the world, and a very low multiple. And I think we're starting to see some growth in earnings as well as dividends. And I think, again, very good value area. And while the stock market price may not have moved as much as some others, if you look at total returns, it's beginning to compound at a relatively attractive rate, I think.
Peter.